For today's training, we're going to go over mortgage consultation. We're going to do a little bit of role playing because I want this to be interactive. Make sure that you guys are paying attention. Setting the stage for this. Why is the mortgage? Okay. My opinion is that this stage, your mortgage consultation stage, is the most critical and it's the most important part of the mortgage process. And not to be so obvious, but can anyone answer why? Anyone? Why is the initial mortgage consultation stage the most important?
That's your only opportunity to set an impression.
There you go. Bingo, right?
And to prove to them that you're not a robot.
Yep, there you go, right? Why is it important? Because that is your at-bat opportunity to convert the lead, right? You could get 1,000 different leads from 1,000 different, sources. You can't convert the lead. What's the point? Why are you in this business? And what drives you to convert? What gives you a higher probability of converting that lead? It's you. It's you, the loan officer. It's you, how you, the loan officer, handles a handles that initial consultation or the interview, right? Ultimately, that's what the client is doing. They're interviewing you to see is Tariq, Freddie, Alex, Peter, right? Perhaps Cindy down the road. If you are trustworthy, if you are competent, if me as a consumer, I'm willing to move forward into the next stage of the process. The consultation is the most important part because it's what helps you get paid. There is a second portion of it though, and that is strictly from a mechanical standpoint as a loan officer. The consultation stage is critical because it allows you, the loan officer, depending on your thoroughness and your competency through it, it's going to increase or decrease that probability that loan closes. Okay, I'm going to say that one more time. So obviously it's important because it helps you convert the lead. Okay, getting that borrower, client, or customer turn into a client of yours who you will be working with, right? Getting an application in, opening escrow, right? That's the name of the name of the game here. But as far as the latter half, okay, to ensure and to have the higher probability that once the loan is in, the loan has converted into an actual, live a file from a lead, to ensure that it closes, I truly believe it's on you, the loan officer, to do a competent and thorough investigation up front. It is not the processor. It is not the underwriter. Okay. That was probably the case pre-market crash in 2008. That was, what is that? What is that one famous movie? Gary Glenn, help me out here. You guys all remember that sales movie? Anyone? No one's old enough here on this call, huh? You guys know what I'm talking about? Oh, no, the famous, the really, really famous sales movie. Anyways, that might have been true then. Glenn Gary Glenn Ross film. Okay, Glenn Gary Glenn Ross film. If you've never seen it, watch it. Okay, Glenn Gary Glenn Ross. It's a tongue twister. I didn't realize it. But in any case, it is your job as a loan officer. The reason being is because one, we're Dodd-Frank, TRID, all these rules that you heard of, Reg Z, Reg B, Reg whatever, right? TILA, RESPA, right? You have Dodd-Frank, you have QM, you have DTI, you have ATR. You have all these, industry terms and slogans and acronyms, right? There's so much of it. And so it's your job. You're the conduit for that client, okay, the customer, and their ultimate goal, right? Which is to close a loan, be it a refinance or a purchase or a cash out or a HELOC or a reverse mortgage or a mobile home. That's the end goal. And the conduit between the two is going to be you. So you have to be competent. And the more thorough you are up front, the higher chance, the higher probability of success you will have. That has been the most truthful, that is the truest saying in this industry that I can attest to, having been in this industry for as long as I have. The more that I know, the higher my success rate of closing. And I'm sure Peter will say the same here, right? Because Peter knows 10 times more than I do. And I'm sure his closing ratio is significantly higher, right? And he gets more at-bats, right? So the more you know, the more at-bats you will get as well. So we're actually going to split this training in two. Today, I'm just going to cover the bread and butter of the mortgage consultation piece. Okay, there's the ancillary stuff, what I consider the ancillary stuff, the selling the rate, the going over the closing cost, the explaining the process. Okay. But then today we're gonna focus on the meat of the consultation. So I'm gonna bring up I'm gonna share my screen with a cheat sheet that I call it, that I have created many years ago. This one has been rebranded, so the brand right now. So just ignore the company branding. I am working with Harrison to get this updated, but this one here has been changed over several, because I've moved around quite a bit before coming to Giving Tree. But nonetheless, when I have a consultation, when I get to the meat of it, this is what I go through every single consultation. And so much so that I am so confident and comfortable that I'm going to do this with you. So please, it's going to be I hope it might be a little chaotic here, but I'm going to popcorn and choose people. So please be attention. Please have your videos on. And we're going to go through a consultation right now. Okay. So I get on the phone and I go through my spiel. Okay. And you guys can cater it however you want, of course. You go through my spiel of setting up the foundation of what a mortgage is, how it works. And I go, look, ultimately, Mr. Borrower. Okay. Ultimately, I'm going to pick on, let's pick on Alex right now. Ultimately, Alex, when it comes down to being qualified for a mortgage, there's only 4 areas of qualification. That's your income, your debt, your credit, and your income, your assets, your credit, and your appraisal. Okay, I give them their 4. I say mortgage isn't rocket science. It's only really 4 areas of qualification. This is where you guys have to understand and know the 1003. Okay, I'm going to repeat that one more time. To be a successful loan officer, one component, okay, Tariq, Cindy, you have to know the 1003 like the back of your hand. The 1003 is the single most important piece of paper information you need to successfully transact a file. Okay, so I basically condensed the 1003 in my head now, because it's been so long, into 4 sections of qualification. As I just said, income, assets, credit, and appraisal. I specifically say, hey, I'm going to start with the easiest one, Alex. The appraisal. Do you know what kind of property you're interested in purchasing? The property type: a condo, a townhome, a multi-unit, an SFR? Condo, great. So what happens is, this is the easiest part of the qualification. All that is going to be required on your end is to pay the appraiser directly. They'll schedule the inspection with you, and off we go. There's nothing else you have to do, nor do I. We only hope that the appraisal report comes back in with the value supporting the purchase price, or a valuation that's sufficient to get your refinance completed. Do you have any questions there?
No.
It's usually pretty simple, guys. There's nothing to it, the appraisal. But the appraisal, why I use it is because it allows you to then, and sets the stage for the type of property, right? And the type of property then is going to help you understand the down payment effects, right? Because can you do a 3% on a condo? You don't know? Yes, you can, right? You can do a 3% on a condo. Can you do 3% conventional on a multi-unit? Anyone else? Yeah? Okay, good. And that's actually new, right? That's actually new. Okay? So it helps you understand the dynamics. Now, on a 3% condo, is your rate going to be, what's your rate going to be? At market, or is it going to be higher than market with LLPAs?
Higher.
Higher. What about on a multi-unit?
Higher.
It's going to be significantly higher, right? So kind of helps you understand that. But you also remember a few weeks ago I talked about the different fees, right? So what are one of the fees that we are to tell our clients to expect up front?
HOA certificate.
Okay, if it's a condo, but on the topic of this first one right now, the qualification category, what is it?
Appraisal fees.
The appraisal fee. Great, right? So it helps you then set the stage for the appraisal fee, because again, there are those three fees: credit, appraisal, HOA if it's an HOA, and so on and so forth, right? So that's appraisal. Second thing, I go assets. I go, Mr. Huang, assets. When it comes to assets, when it comes to mortgages, any and all use of funds during, for, and after the escrow will have to be sourced and verified. So for you, Mr. Huang, what you'll need to provide the lender typically is 2 months bank statements. And what we're going to do is we're going to look through it, review it, and make sure that there are no unusual large deposits or even unusual large debits that come out of your account regularly. But all in all, the down payment, closing cost to acquire your property will need to be sourced and verified. Mr. Huang, do you know in the last few months if you've made any large deposits?
I have.
You have. Okay. Well, large deposits can be it's a little bit so I'm just losing words right now. It can be arbitrary. How much? What was the amount that you just recently deposited?
You know what, Ragnar? I sold a car and it was $10,000.
Great. So $10,000 in most cases will constitute as a large deposit. Every lender has a different definition of large deposit. Do you happen to have a bill of sale for that car?
I don't, but you know what? It was to my nephew, so I could probably draw one up. Would that help?
That absolutely would help. Yes, that's great. So right there, I've already identified just through the consultation, right, that I can expect to see a large deposit. You as a loan officer, you should know this, right? Any large deposits have to be sourced and verified. Now, what if Mr. Huang said, you know what? I lost it. It was raining and it got drenched and I don't know who I can't get a hold of the client, blah, blah, blah. What if that was his response, right? Then for us, it might be that we can't use that $10,000 deposit. I'm just saying it can be the case, right? But again, having the questions and covering it up front prepares you better for that file. Maybe then it's, Mr. Huang, how long ago did you sell that vehicle?
2 weeks ago.
Okay, 2 weeks ago. How soon are you looking to purchase?
Probably between the next 30 to 60 days.
Okay, great. So then now for you as a loan officer, you can think, wow, Mr. Huang's going to provide me a bank statement that has a $10,000 large deposit. Yeah, that can't be sourced. But because he said he's not looking to purchase in the next 30 to 60 days, it may be able to cycle out, right? Where right now it's December. Maybe he's going to buy in February. Maybe once we get the December bank statements and the January bank statements, he won't have a large deposit. Now it's an opportunity for me to say, Mr. Huang, just know that's great. Because you're looking to purchase, sometime in January or February next year, that might actually give you some time to cycle out the large deposit you can't source. Just please keep in mind moving forward, try not to make a large deposit. but if you have to, can you ensure that it's sourceable, that you can verify it through documentation? So if you get a large gift fund and you have to deposit it, make sure it's coming from someone that's credible, that has funds already in their bank account, from your grandma or your mom. If you're looking to sell another item, a personal item, please make sure you keep a record of the bill of sale, right? So you can now consult them on that and make sure and set the stage for them on that, okay? Any questions regarding assets? Okay, another aspect of assets is this. Let's just say the response is, yeah, Ragnar, I have about $100,000 or $200,000 in assets to use towards closing costs and down payment. Then naturally, my response as a loan officer is going to be, where are those funds sitting? It's some's in a checking, some's in an IRA. I'm going to pull out some. I'm going to sell stock. Then it's your opportunity again to set the stage, right? Help them understand, sir, ma'am, because just know that when it comes to sourcing funds, we will need, the mortgage guidelines require 2 months of all funds, verified funds. And because you have to liquidate from your IRA and because you have to liquidate from your stock account, I just want to set the stage for you, knowing that you're going to have to provide a lot of documentation. Not only do we need the 2-month statements, the asset statements, but once it gets liquidated and transferred into a depository account, you will need to provide the transaction history of that transfer of those funds, right? So, and you guys all know this, that's where things get really messy. Right? Because people want to think, they can take a snapshot. Remember, we all know this. We can't take snapshots. Everything has to be in chronological consecutive history, right? So if you have a statement, November statement, that suffices the November 30 days. But let's just say that there's a transfer that was made today. You know that the consumer cannot just snap a picture of the liquidation or the debit for today. They have to provide it from November, the end of 30th, December 1st, which was yesterday, and then today. You guys all understand that, right? It has to be a consecutive history. So knowing that guideline, knowing that rule, you can set the stage with the client. So usually it's about the large deposits and the sourcing of funds. So I go, let me pick on. Hey, On, let's keep it simple, On. So just a wage earner. Hey, On, so what do you do for a living?
I work at McDonald's.
Great. How long have you worked at McDonald's for?
10 years.
Awesome. Well, that's great to hear that, On, because there is in mortgage, there is a 2-year history requirement that we have to document. So 10 years, you're well above that. So that's going to be easy. What's your current, what did you gross last year on your W-2 for 2024?
I grossed about 60K.
60K, great. Awesome. And of that 60K, how much of that was consisted of your base pay?
60K.
60K. Okay, so I just want to confirm that you don't have any overtime or bonuses or anything like that. No other what we consider variable income? No, great. So I'm going to pause there, guys. That's so crucial to do, right? Because it sets the stage again for the other fee that we have to mention to the client. That is what, On? That may be required if you have variable income.
The WVOE.
There you go, bingo. Remember, just about a month ago, I said there's 3 upfront fees, or there's 4 or 5 potential fees up front. If On said, my customer or my borrower On said, of that 60,000, about 40,000 is my base pay and 20,000 is overtime and bonuses, boom. You're going to have to set the stage now that if we want to qualify that other additional income, a WVOE may be required, and that costs money. It's a fee. Okay, it could be $200-$300. Okay, so great, On. And finally, what is your current pay rate right now? Are you on a salary or are you an hourly pay right now?
Hourly.
Hourly. And what is your hourly pay?
What does that add up to? Like, is that like
Let's just say
$25
$35
an hour? $30 an hour?
Yeah, so let's just say 35 now, right?
Okay.
Okay, so great. So he says, my current pay is 35 an hour. Great. You know that he works a full-time job. He works 40 hours a week. Okay. He doesn't collect overtime or other variable bonus income, commission income. So he's a pretty easy, straightforward borrower. I know this is from a very, very long time ago, maybe mid-year, so 6 months ago, when we calculate wage earner income, what is the number of hours that we use for a full-time employee?
20.
You guys should have this all memorized.
Is it 2080?
Good, bingo, boom, good job. On it's 2080, right, guys? It's simple, right? It's 40 times 52, right? On your calculators, right? 40 hours in a full-time work week times 52 weeks, it's 2080. So now I'm just calculating as he talks. I go, oh, so it's 35 times, and I have my calculator rate. 20 times 2080 is 72,000. So you got a $12,000 increase, right? Divided by 12, it's $6,000. Now, because he is a wage earner, and because we're not using any variable income, despite his W-2 saying $60,000 for 2024, am I going to use a $60,000 or can I use a higher 35? Higher 35 because it's a wage earner. So, but at least now I know, okay, I'm working with a really clean borrower, right? By the way, guys, just a disclaimer, this rarely happens. So this is like the most easiest case here. But yeah, I know we got the 2-year requirement. He's full-time, which is good. He's salaried, which is easy to calculate. And because he received a increase last year, we can use that increase because he's full-time, a full-time employee. Great. So now, so I'll ask, are there any other sources of income? Do you have rental property? Is there a spouse involved? Do you collect any additional some kind of pension or annuity, rental property? Do you have any other income?
I have a wife. I'm married, and she has a rental property.
She has a rental property. Now, will your wife be going on as a co-borrower to the application?
If she needs to be, she can.
Okay, if she needs to be. Okay, great. So we can stop there. And now, if she needs to be, we will do the same questions for her. Okay. Now, when it comes to rental property, that's probably going to be a separate conversation or separate training on calculating self-employment income, really, because rental property, Schedule C, sole Schedule C, sole proprietorship, corporation income, that's all kind of calculated a little bit differently, guys, right? So that'll be for another separate training, but let's just say she is another employee somewhere else at Carl's Jr. Right, same thing, right? But here, I'm able to calculate On's income, right? It's 6,000. So as I'm having this consultation, I've already calculated her qualified income is going to be $6,066 a month. That's a gross income, right? So I've done that for my DTI, right? So then I go, great, thank you for that. And then the final section, because I said the 4 areas of qualification: appraisal, assets, income, and then credit. And I go, hey, Freddie, Mr. Marquez, the last area of qualification is the credit. Now, the credit serves 2 purposes. Number 1, it's for your FICO score. Once we get your FICO score, that will kind of largely determine whether you're going to go into, what mortgage program we're going to probably fit you under, conventional or FHA. And then 2, it is the credit that we use, or it is the monthly debt obligations that reflects on your credit report for us to help compute what's called a DTI. Now, in just about all mortgage products, under the Dodd-Frank Reform Act, there are guidelines set forth for mortgages called qualified mortgage. And I'm going to go over this next time, guys. And qualified mortgage qualified mortgage Geez, I am really struggling today. A qualified mortgage outlines how a borrower gets qualified for a loan, and the criteria that they use is called the DTI, the debt to income ratio. Okay, and it's really simple math. It's elementary math. It's your total debt that appears on your credit report divided by your gross monthly income. So we've already calculated your income. So Mr. Marquez, if I was to pull your credit report, what kind of debts would I see? Do you have any car payments?
Yeah, I actually just bought a new car for my son.
Okay. Okay. How much is that monthly payment?
We got a good deal. We're paying like $750 a month.
$750 a month. That is a deal of this day and age, right? Do you have any school loans, sir?
Just one. Yeah,
One.
we have one. Yeah.
And what is your monthly minimum required payment?
Right now we're paying interest only. It's $25.
$25. Great. And do you have credit cards? Do you pay it off every month, or do you let it kind of carry over into the next month?
No. I actually have some balances right now.
Okay. How much in balances do you have?
About 8,000 total
8,000?
between
Okay.
three credit cards.
3 cards. Okay. So we're probably looking at like somewhere about like $250 total monthly minimum payment that's required.
Yeah, like $300-400 probably.
400. Okay, so I'm going to just go ahead and use it. I'm going to go conservative and use 400. Are there any other debts that that you may have that I haven't covered that might appear on your credit report? Have you co-signed for someone's car, or a boat, or school loans, or anything else that you may have co-signed for?
No, not
Okay,
really. No.
Okay, great. And Mr. Marquez, whether you know or not, what do you think your FICO score is roughly? Is it 600, 700s, 800s?
Oh no, yeah, I have this app that tells me it's saying I'm like in 725.
Awesome. That's great.
That should be good, right?
Yes, you should be good. That's a good score. So here is where, guys, I'm going to pause and say, this is a good opportunity. I always use it. I wish I could be a spokesperson and make money off of this, but I always say, hey, Mr. Marquez, or Mr. Borrower, have you heard of Credit Karma? Right? It's a free app, and it gives you the 2 scores from the 2 out of the 3 bureaus. It's just a good gauge, right? And they get all like, oh, I can do that. It's free. Oh, this is pretty cool, right? So they get all happy about it. So just a side note, guys, I always reference Credit Karma. For you guys here personally, if you guys don't use Credit Karma, you should. It's a neat little app that helps you monitor any late payments, any your and helps you can see the trends of your FICO score. So, anyways, going back, so I go, great. Now I know, okay, more or less what kind of debts my client has. So I'm going to add that up. 750 plus 25 plus the 400. Holy smokes, I can't even do math anymore. But 1175. So 1175, right? So from a mortgage standpoint, and I'll tell them with Mr. Marquez, earlier when I said, what kind of debts would I see on your credit report? And by the way, these are not your subscriptions to like your magazine or your home fitness or your cell phone. It's just what appears on your credit report. And sometimes they might not even know. So just ask them, do you have any car payments? Do you have any school loans? Do you have any credit cards? Okay. So you add it all up. So now what you're going to get is here, I'll share you the screen now. You're going to get a DTI ratio, guys. Okay. And Harrison, this is what I need help on. So this is something I created over 10 years ago. I literally call it a mortgage cheat sheet. Okay. I share this with clients, and I especially share this with agents. Okay. And it breaks it down, right? Income, assets, appraisal, and credit. And what it is, it's just like it's a hodgepodge of things of mortgage, right? Required documentation, guidelines, so on and so forth. For you, Cindy and Tariq, this might be very helpful for you guys. Obviously, these all need to be updated, right? I put things like synonyms, not synonyms, agency conforming conventional, Freddie, LDU, LP. It's like there's so much jargon out there, right? And then the loan agency limits. As you can tell, this is from a very long time ago. Do you guys know what the new agency loan limit is right now? You guys should all raise your hand and just spew out the answer. Who knows what the loan limit is?
830 or something like that?
867.
I'm still looking for the right
loan limit of a conforming loan.
Yes. Thank you. Thank you, Peter. So what is the loan limit for the conforming loan?
806. I believe it was supposed to change to 816 now.
Oh my goodness, guys. This is embarrassing, Peter. Oh my goodness. Giving tree.
802?
We have to touch this first.
Okay.
Oh my goodness, guys.
Oh my goodness, guys.
We're losing money.
See, help me out.
832, 750.
Yes, guys, you guys should know this.
You need to print it out. I'll share this information in the group chat. Print it, put it next to your monitor until you memorize it. This is a habitual thing that you have to speak it out. 1 to 4 units conforming to high balance. This is undeniable. This tells me that you guys don't want money. You are just spilling money, bleeding money out. Memorize it, please.
Guys, yeah. As loan officers, I mean, you need to know what the loan limits are, right? And then there's also loan limits for FHA, which is different. Okay, it actually gone up quite a bit. Right there, it says 26,000, and then for high balance, that's it right there. Okay. So definitely know what this is. And then also look up FHA loan limits, because remember, it's different per county, guys. Okay, it is different per county. So please, look into it. I don't know, maybe when Harrison and I go through the updated mortgage cheat sheet, we'll update it and we'll share with you guys. Okay. But, right. So the mortgage cheat sheet, where is it? Here it is. Okay. So it has that information on there. Again, it's just a quick reference guide, right? For agents. And then ultimately what we did, guys, is we just calculated a DTI. Essentially. Okay, that's the whole point. That's what I did. Because at the end of the day, isn't that what we want to know? Right? The DTI, because we want to know how much they qualify for. So we know Mr. Marquez's monthly debt obligations is $1,175. Okay. Now, we also know that Mr. On's income is $6,066. I'm just going to round it up and say $6,000. Okay. So if we know this and we know part of this, all we have to do is find out this. Right? And that housing payment is not very difficult to figure out. Okay? Because all of you guys should have something like this. If you don't have it, I will share this with you. But I'll only share if you email it or you let me know. So I have a bunch of amortizations that I've done for clients over the years, right? I don't know if you can see my arrow. And I got very, very lazy because some of them I don't even name them anymore. And something I just repeat it over and over again. But this is an amortization schedule that I use, a payment factor that I use, because people, I told you I'm old school. I'm sure we have better tools than this, right? Peter, don't laugh at me. But this is what I use, okay, guys? So going back to this, I need to figure out now how much payment they're able to qualify. Well, it's easy. Let's do the quick, simple math, right? It's $6,000 is their gross monthly income. We know maximum is going to be 50. So I'm just going to do divided by 2. Okay, $3,000. Mr. Marquez's monthly debt income is 1175. Okay, it's about 1825. I'm going to pad it a little bit, just say straight $1,800. You're not rounding up, you're rounding down. So now that I know it's $1,800 for this here, okay, for the new PITIA, $1,800, I then am going to be playing around with these scenarios. Does that make sense? Okay. So here, let's just say that they're going to do an FHA loan. Okay. 3.5% right here. Okay. With taxes at 1.25, with insurance, with PMI at 55, maybe I could sell the rate at 6%, 5.875. We're still not there. So, and there's no HOA. Again, this scenario is for, I don't know, Arkansas probably, well, okay, or Montana, okay? But I could play around with this now. Maybe I go with the 275. Boom. So I will tell Mr. Marquez, Mr. Rodriguez, Mr. Huang, for your scenario, you can qualify for under a $275,000 purchase price. If you do the minimum 3.5% down under FHA, we're going to use property taxes of 1.25, homeowners insurance about 30 basis points or 25 basis points. There will be PMI, sir, blah, 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 at a rate of 5.875. Your monthly payment is going to be $1,766 for an SFR without HOA. And you would be able to qualify for this because now all you do is you plug it into this, right? So 1175, right? Where's my calculator? So 1175 plus 17, whatever it was, 86, right? Divided by $6,000. Mr. On's income is under 50%, right? So now understand that there's different tiers of DTI. So I put a range. It actually can even go higher for FHA. As you guys know, it can go up to 56.99. VA, there's technically no DTI ratio limit. There's an explanation of what PITI is. Okay, don't worry about this right now. But yeah, so that's that. Now I'm done with the meat of my consultation, right? So we just spent about a good 40 minutes on it with a lot of fillers and whatnot. But once you get in the groove of this, guys, it'll take you about 10 to 12 minutes to do. And I'm telling you, it is highly advisable to do it. Okay? Because it helps you understand the file, because you yourself, the loan officer, needs to understand the file, not the processor, because ultimately you're going to be the one that's relaying that to the processor and ultimately to the underwriter. Okay? Any questions, guys? Was that helpful? Yeah? Okay. So, yeah, we'll get this one, updated, spruced up, jazzed up, and maybe you guys can create, whatever, brand it yourself and you can change it however you want it. But it's just a good reference page for you guys to use. In the beginning, I used it a lot, actually, when I was first doing this. But I was tired of going through all the different guidelines and stuff. And my conversations would be like an hour and a half to 2. And then finally, it's fine-tuning, where I created this. I was like, oh, this is good. I could use this for agents too. But anyways, I referenced this during my consultation, and it helps me get a good picture of who I'm working with, right? So right now, I know just about everything that I really need to do about my 4 borrowers. Got decent credit, right? Not perfect, but it's good enough. So one of the questions I could have asked Mr. Marquez was, hey, Mr. Marquez, what's, while 720 is a great score, what's actually keeping it from being like 800? Did you make a late payment of a couple years ago? Do you have any collections, right? That helps you. Those are the kind of follow-up questions you can have. If Mr. Marquez said, oh, I have 800 FICO, then it's like, okay, then he has no late payments or anything. Now, if someone says, oh, I think my FICO score is like 620, now that's going to extend the conversation. But it should. Why? Because now you might be dealing with someone that's $10,000 in collections. Maybe they have mortgage rates. You don't know, but you want to dig into it. Okay. So that is the bulk, again, the meat of the consultation, income, assets, credit, and appraisal. That gives you a very good idea of what type of borrower you're going to be working with. He's a wage earner, self-employed. He makes this much. He has potentially a co-borrower that we can use. He has $200,000 sitting in the bank, or he has assets that are spread out, different brokerages. But it gives you an idea, a very good idea of what you're working with. That's why the consultation is so important. Because if you just say, hey, great, we have a great rate at 5.75. Look, all you need to do is apply and I'll let you know. They go apply, you get all this stuff, and you're just like, whoa, what is all this? Right? It's not, the reason why I like this, guys, is this. It's not good enough, and it's not thorough enough for you to make a judgment without having any prior conversation with your client and just getting their documentation. Okay? Does that make sense? So, in other words, if you, the loan officer, ding, ding, got an email, and it says, May Jones applied. You open it up in ERP. And in ERP, there's tax returns, pay stubs, W-2s, bank statements, and the ERP 1003 application. And the credit, let's say you got the whole shebang. Do you know how much time it will take you to piece together everything? The timeline. What if they work multiple jobs, right? What if, I don't know. What if you don't know that there's another co-borrower, right? You don't know where funds are coming from where and where it's going to be transferred to. Having the conversation up front helps. And the more you do it, it doesn't have to be 45 minutes to half an hour. It can be 15 minutes. Because again, time is precious, right? We all understand that. We all know that. You will fine tune it. But you'll have in your head and you'll have notes. I'll show you guys this. Okay. You'll have notes. Okay. I have a notebook. I have usually 2 notebooks per year. It's somewhere in my desk here. But every year I go through 2 of these. Okay. Because as I'm having the consultation, I write Mr. Marquez, Mr. Kwan here, and I write down everything, or I should use it on a computer. Okay, if you're smarter, but I'm not. And then when I get the application, it helps me really piece things together. So I'm going to finally then ask if Gia is paying attention or on right now, or who else is on? I don't know, Sydney, if you can answer it. Is it easy on a scale of 1 to 10, 10 being the good and 1 being bad? Are you guys able to work with my submitted files fairly easy?
Yeah.
It's okay. Gia's busy. Okay. Oh. Yes? No?
Yeah.
Yeah? Is it thorough enough up front where you don't need to request a lot of additional information?
Yeah. So when you email me the new file with this like brief description of the scenario, that really helped me to start the initial structure.
Yeah. Okay, good. And I'm only able to do that to our processing team because I know my client's situation. Okay? It's not like they just applied and it's like, hey, processing team, Gia, review this. They don't have the full story. Okay? So thank you guys for tuning in. That was part 1 of the mortgage consultation I wanted to go over. Next week, we'll cover the ancillary parts of it. I don't know if we're going to need to have a 3rd section of this, but again, I can't stress enough to you to be thorough in your consultation. And please don't be afraid that it's going to take too long. The more you do it, just like anything else, it's going to become more and more streamlined. You'll know what the questions to ask. Use a cheat sheet to kind of go over it, get yourselves familiar with it so that you, the loan officer, can set the stage properly. Yes, for the client, of course, and for your paycheck. You're ensuring your own commission check, but also to the rest of the team, right? Because ultimately the processing team is going to then take this on and make sure, right, it gets to the finish line, it gets approved, and we can close it. All right? Any questions before I end it there? None? All right, Peter, anything?
Yes, thank you for the detailed orientation today.